Ted, Mark, Michael, Victor, Martin, Fred. Good morning. How are you? All right, let me look at my positions. So I'm looking at Goldman Sachs and Schwab. We were at the closing bell on Friday. Kind of did positions, so I want to review it. Right, let's invite our friends from Discord. And it's the Discord, share screen. All right, Cherry Blossom, Hydrated Muffin, 820. Okay. That Victor, good time to buy gold on this pullback. Yeah, we'll talk about Happy Tax Day, Ernest. Thank you. Bob is present. All right, let's talk about gold. Let's talk about geopolitical risks, interest rates, inflation. There's a lot to talk about. Retail numbers. All right. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of Tradespoon in Yellowtown. And today we're using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio for those of you who are new. My background is technology. We have a team of financial engineers that are optimizing, building new models to find signals in the market, and I'm trading these signals in the live trading room. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes in any trading decisions, best performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, trading psychology is important. The goal is to be cautious. Starts, before market opens. You look at the news, geopolitical risks in Middle East. You look at retail numbers, CPI, 10-year yield. So kind of a top-to-bottom approach, and just to see pre-market futures where the spiders are up. I think close to maybe half. I think last time was check almost 1%. And then you review your journal, right? Important to look at the previous trades, what you did right, what you did incorrectly, and then the trades that you're planning to place today. Same thing. You go through a checklist. Right, you go through a checklist. One is, do I have on average 30% of my portfolio in cash? Okay, then check. Do I have more than 4 positions? If not, okay, check. And then, am I risking more than 2.5% of account value per position? Right. So if I'm entering position, I'm going to look at my stop level, look at my target gain, and make sure that I'm not risking more than 2.5% of account value per position. There are other checklists. People look for liquidity. Maybe I don't trade meme stocks. Don't trade naked options. Look for 2 to 3 to confirm trend change. So I listed some of the stuff that I use. I think a lot of it depends on your psychology or your risk tolerance level, right? So I would put these in your journal, right? In your Excel spreadsheet, wherever you keep track of these trades. It's important to do that and grade yourself, right? And I would be responsible to, kind of accountable to myself. Great. If I did everything correctly and I did not exceed 2.5% of account value drawdown, then I would give myself A or B based on the outcome. If at some point my position was down, 4%, 5%, 6%, then I would give C or D based on what happened at the end. And I would review these positions. What happened here? Give me 1 second. All right, so there are actually no new signals today. We did have a pretty sharp pullback on geopolitical risks. Iran, unfortunately, did attack Israel over the weekend. So let's look at the pre-market futures data. So yeah, so 10-year yield is up. And so on Friday, yield dropped significantly, dropped below 4.5. That's yield is sensitive. If there is a fear of war or recession, geopolitical risk, then yield is down. Basically, and that you need to hide in treasuries, right? You hide in treasuries because of the geopolitical risks and war. As those risks are mitigated, right? Iran attack Israel. It looks like 99% of the targets were 99% of bombs and drones have been destroyed with the help of the United States, Britain, and other countries. So that's great. And now we're back to inflation versus no inflation, right? And earnings season, right? So geopolitical risk, I think, a little bit on the side, and yield basically continues to grind higher, right? We have retail data that came in, I think, better than expected. Let's look at that. No, they didn't. So Monday we had the retail data, right? So retail sales come in harder than expected, and we're back to the conversation of harder than expected CPI data, harder than expected retail, strong employment, and people are working and spending money, and there's no reason for Fed to cut interest rates in June, and maybe instead of 3, it's now, I think, priced 1 to 2 interest rate cuts. And based on the data, as data comes in, that number of cuts fluctuates. But the bottom line now, today, we're back to inflation and interest rates continue to grind higher. That's not good for the market, right? Higher for longer is not good. Dollar continues to grind higher, right? Stronger dollar is also not good for the market. Average on a lot of the indexes. So far, it's holding 50-day moving average. We're bouncing back 80 basis points, 515. The line in the sand is, the 50-day moving average, right? So let's look at that. Today, model predicted actually 507. The 50-day moving average doesn't hold. Still negative trend. overhead resistance is at 515. Right, so at 515, you probably want to kind of probably trim your positions. At 507, potentially go long. I think yesterday's low, not yesterday, Friday's low is the line in the sand, 509. Probably 505, model is right. Probably 505 is your next level of support. That's pretty strong support. That's probably medium term. We spent basically February. Why can't I draw this line? Yeah. So yeah, I agree with the model. So next level, which is important, is the reactionary open after NVIDIA earnings end of February. So that would be the next level of support. That's what model identifies. So model is doing a good job finding the right key support and resistance levels. Like that. That's good. And then Goldman Sachs announced earnings. Overhead resistance is at 420, right? That's the strike we selected on the Friday night. So we'll see if we're gravitating toward the 520 strike. And then Spiders is gravitating toward, let's see where those defense line, right? I'm looking at the open interest. For today, April 15, April 16, first line of defense is 507. So highest strike, highest open interest right now is 507. Stock forecast toolbox identify 507. So 507, 505 is where your support line is, right? So if you're buying at 515 and you think market is going to go higher, potentially, you know, I mean, 507, right? 507 is your stop level, which is 7 points. So 1.5% if you're doing day trading. If you're holding position a little bit longer, maybe a couple of days, I would do 2%, right? 504. 504. If you drop below 504, immediately the question becomes 496 level. So, and again, $250, 2.5% of $10,000 is $250. So if your stop level is 2%, right? $10 divided by 250, 25 shares. Right? That's how you determine how you. The goal is to avoid 2.5% stop loss. Meanwhile, interest rates continue to grind higher. We're kind of new high 3. Strong dollar is flat. QQQ up 60 basis points. Spider 77. I would look at Bitcoin. Was a good proxy again for risk taking because it was trading on Saturday inside. BTC US dollar, I think. This shows just total ownership on it. Yeah, 61,000. So it broke through the 50-day moving average on Saturday and Sunday as Iran was bombing Israel. And now everybody's kind of waiting because it's not all clear, right? The market is up, but Israel basically says we're going to meet and talk about it and decide what Israel is going to do. So for now, it's still below 50-day moving average. This is a good proxy of risk taking. You know, if we drop below 60,000, that would be probably because Israel is decided to have some kind of a form of retaliation. But as of right now, to some of the countries in the Middle East, so I think that at least for now, it's risk off. Risk off. All right, so let's look at the Goldman Sachs and Schwab. Again, usually I wait for 15 minutes. There's no bullish signal. Model can actually more bearish signal than bullish. So let's look at Goldman Sachs. Checklist based on larger conviction. Okay, good, John. Thank you. Oil is in effect. Yeah. So it looks like people are less concerned than were on Friday. That would be a fair statement. Goldman Sachs is at 411, gravitating toward 420. Schwab is up 3%, was down 2%. Should have missed the calls on Schwab. Okay. So Goldman Sachs is at 410. So I do have ratio spreads, basically 410, 420 ratio spread. So let's look at Goldman Sachs. And again, the idea is you look at the open interest strikes. We saw 420 was a large open interest at 420. So based on historical volatility, based on implied volatility, based on positioning, I think Goldman Sachs is going to probably gravitate toward 420, but not break toward 420. So that's kind of the idea. Then I would wait 15 minutes and see what happens. Schwab is up 3%. I did the puts, not, I kind of realized late. I would look at play, right? We kind of closed the play, forgot about it, but play is actually, we do have 50 put, right? I kind of assume it's going to expire worthless, and I just closed the call spread. But play is chugging along and actually sold off precipitously, right? Yes, on Friday as well, and close to the strike price, right? So I would take advantage of that. If you did play earnings, you can close 60 cents, 55 cents. Okay, so let's do that. Let's close play. I actually missed it on Friday. We could have closed it for a higher price, but okay. Play. Let's see. So I have 55 put, and we're close to 55, right? And 50. 50, I think, doesn't have much premium. So let's close the 55 until we can, 50 cents. Let's see. Okay. So now, what used to be a small gain, I think we did it not last week, but 2 weeks ago. Right, so I think originally, right, I did the both butterflies. It was the strike price where I think, based on open interest, were the 48. So $1.10, $8, $10, and close for $40, right? And puts were kind of cost worthless. I did, and I spent 20 cents on the calls. And now I'm able to close 55 puts. So now I'm up 50 cents. Right, 50 plus 20, 70 cents. So I invested $1.08 and closed it for $1.70. Right, so 70 cents, 70% up, 70% up. So that's good, right? So that's kind of a good strategy to show you that you can actually, the price level can reach both extremes. I mean, this is more has to do with geopolitical risks than anything else, but nonetheless. All right, but I still have the risk of short puts, right? If Israel actually does retaliate, well, market is going to sell off on that news. So I do have to try to close 20 put. It's trading at 10 cents. So that's the risk, right? The risk is that it's a butterfly, and I still have the middle strike, right? I still have the middle strike, so I don't want to take the risk that Israel retaliates and all of a sudden we are at 50, right? Because this was a pretty precipitous sell-off, 10%, right? And this is not the earnings. Earnings were the earnings. Right, so it reached both extremes. Calls, I closed the calls, and now it actually reached the puts, which usually does not happen. This is closed them both, basically. Okay. So that's Goldman Sachs. Sorry, that's play. If you were in that trade, at least I'm out of that trade. Just got filled on the on the 50 put. So 40 cents. So another 40 cents. So right now 60 cents, 60%, that's good. That's good. 60, 70% return, that's good. Amazon, I'm in Amazon, right? So that's part of the premium service. Assuming there is no war with Iran, things should destabilize. Interest rates are going higher, and one of the theories that we're going to have a similar year to 2023, to the last year. Because if the inflation is higher for longer, and let's assuming there's either no interest rate cuts or maybe one interest rate cut, well, last year, Amazon and Magnificent Seven led the rally, and then value and small caps underperform. So this could be a similar year. Okay, and then 410. Okay, so I'm going to close my 410 call. What time is it? 8:41. Okay, so it's been long enough. 480. 490. Okay, so the same thing with Goldman Sachs. So you can see small caps are they underperforming today? Well, actually in line with spiders up 80 basis points, small caps 70 basis points. Still underperforming, small caps are more volatile, and they are fighting for the 50-day moving average, right? I think they're below 50-day moving average. Still pretty bearish price pattern, right? Pretty bearish price pattern. We had a pretty sharp sell-off on Wednesday as a result of CPI data, right? It's sensitive to the interest rates, small caps, high beta stocks. And Friday regained half of its gains, right? But that's the breakout. So it's right at that breakdown of 500 level. Oh, sorry, 200 level, 200 level. So I would watch 200 level on IWM. Silver is up. We talked about, does it make sense to buy silver? I think if there is no war, gold and silver had a very large reversal, right? Which is a little bit concerning, right? So my thought process, it's again, it's your view what Israel will do, right? And this is very hard to predict, right? There's just a lot of, you can argue that they have to retaliate, right? Especially the conservatives, which is, a big part of Knesset in their Congress, right, or Parliament. So they want to retaliate, obviously, right? And this is the only opportunity, sounds like a good opportunity, especially with their nuclear program. So you can argue that they should or will at some point retaliate. But then on the other hand, there's a lot of pressure from the world, that nobody needs. It's already escalated. Nobody needs, another front to be open, and they just need to concentrate on Gaza first. So I don't know. I'm not gonna say what my opinion is. It's irrelevant what my opinion is. What's relevant is interest rates and VIX, right? How's VIX? VIX, I think, pulling back. So silver, this is a pretty large volume, right? So it's kind of exhaustive. 4% up, 2% down. It looks like an NVIDIA chart, right? It looks like an NVIDIA chart. And we know what happened to NVIDIA after that reversal, right? When it hit 1,000, right? And then on March 24th, and that reversed, it's basically losing the momentum. It's reconsolidated. That doesn't mean that on NVIDIA earnings it cannot shoot to 1,000 or 1,400. That's possible. But now it depends on earnings. And bottom line is that if you long calls, that's not, or sell call spread, sell put spread, right? Sell premium, that's probably the right strategy. So on silver, it's probably either stock or selling premium, right? Is not the right strategy right now. That's not a, that's looks like exhaustive strategy that needs at least some kind of consolidation. All right, questions. Okay, so Goldman Sachs continues to drop. Schwab continues to rally. Okay. Wells Fargo is up 2%. JP Morgan is rebounding after Friday, so that's a good sign that at least banks were oversold. Let's see what time is it? 8:45. So you have the first 15 minutes, right? So now you kind of have the base, and you kind of know where the Goldman Sachs is trading. All right, any questions? All right. Question, Victor. Sounds like hedging is a good idea. Yeah, I think at least short term, I think it does make sense to hedge. Let's see, where are we? So Spiders, Microsoft is up, Meta is up, Amazon is up, Apple is down. So Apple is down. NVIDIA is up on, I mean, we have a rebound basically from Friday's sell-off. I don't think there's any new signal, right? You look at the Spiders. Let's look at 1 hour chart on Spiders. Right, so I would say Spiders have to, let's see, what do they have to clear? Right, and you know, it doesn't, I don't think, at least I haven't read anywhere where Israel says, listen, we're just not, you know, it's okay to bomb us, you know, was, you know, ballistic missiles. They said we're meeting and we're deciding, and you know, that, you know, you don't know how long it's going to take or the timing of it. I don't think they know it. So okay, but at least based on price action, we need to put 20, right? So our QQQ put spread, I think it makes sense to see how we're going to trade. All right. The iron condor range for Netflix expiration. Well, Netflix is earnings, right? I would probably not do it ahead of time, but same idea as, you know, you look at the open interest, right? So Goldman Sachs, there was some open interest. Oh, sorry, wrong chart. Or play, right? Play was interesting. I selected 55 put. It wasn't random. I'm looking at these open interests, and these are voting machines, right? So if negative news, that's where, you know, Goldman Sachs could be, right? A lot of open position at 380, right? And on the upside, basically 420. There was a little bit 410. Now that we're at 410, it's gone, right? But 420. So it's not a huge positioning, but nonetheless, I think Goldman Sachs is gonna, it's gonna spend some time trying to get, or probably will not break that level, if I have to guess, because this is call selling. Netflix is a volatile stock. It can move 20%. So I would for iron condor, I would do the same calculation, right? I mean, you can clearly see, kind of with your naked eyes, what the voting machine says. 550, so 75 points, roughly 10%, 11%. People think it can drop 11% by Friday's expiration, or it can rally. I'm going to guess it's also 11%. But let's not guess. 700. 75 points to the upside, 75 points to the upside. Majority of the people think on animal spirits, people are buying calls out of the money, right? So that was last semester, that was last earnings. Now people are a little bit cautious, right? They're selling 700 calls because they don't think it's going to say 550. 550, okay? So that's positioning. Historically, Netflix could move more than 10%, and often does, right? And often does. So I would say that's probably, if I have to guess, maybe 1 or 1.5 standard deviation move. But let's confirm that. I mean, it moved more, but let's see. What did it move in Netflix in February? Sorry, my computer's slow. I need to restart it. Apologize, but okay, 500 to 540, right? This is what, 490 to 550, 540 to 490, right? So 50 points, so 10%. Okay, so last time it moved 10%. Here it moved from 345 to 465 points. More than 10%. Yeah, 13%, 15%. So that's more likely. So 13, 15%, 10%. So probably volatile if I have to select. And I think one of the arguments was that it needs to do a catch-up trade. I don't think it recovered all of the gains, right? Yeah, right? All-time high 700. So the bulls will argue that it needs to recover all of the losses since October of 21, right? November of 21. And bears are voting that if it misses earnings, then it will drop 550. Okay, so that's historical volatility. Open interest. Let's see what the options tell us in terms of prices. April 19, Netflix. Let me just look at Goldman Sachs. Still have a bullish position. Try to close at some point. Okay, so we're sitting at the 10 call. Need to get rid of 420 call, which I mean, as long as it doesn't move, then it's then there's a lot of time decay. Still $1.60. Okay, still $1.60. Okay, fine. So what were we talking about? Netflix. So April 19, 625. Okay, let's see what the implied volatility, right? This was historical volatility based on historical moves. Another one was positioning. Now we're looking at what the supply and demand for options tells us. So 26 plus 27, roughly 53, right? 53, 54. 54 plus 24 is 74. 54 plus 24, 54 plus 4, 24, 78. 78 plus 20, 10 to 15% move, right? If you do half of this, right, 27, let's do 27 plus 26, 53, 76, 80, 100, right? So 50 points. So one standard deviation is 50 points, 675, right? Two standard deviation is 725. And in terms of positioning, it's so if I had to do it today, Netflix is not announcing earnings today. If I had to do it today, probably you want to sell 700 call and it's 550 for. Let's see how much premium is 700 call. So close to 1%. That's a lot, right? So I would go a little bit further. I would look at the implied volatility because I don't like to get called. So if I had to do it now, I would probably sell 725 call. Right? I would sell 720, like a ratio spread. You can buy 490 call and sell 2 725 or 3 725 call. Depends if you want credit or debit, right? Because it could get to 700, right? The theory goes is that these will act as the magnets. Market is volatile, so I wouldn't, either do iron condor if you think that, if you want to be short. Your first decision is, do you want to be short volatility or do you want to be long volatility? With geopolitical risk and earnings season kind of being pretty volatile, you can see today Schwab, Goldman Sachs, they're all reaching or getting close to those strike prices. So I think right now it's either butterfly, very conservative, or ratio spreads, a little bit more aggressive, right? Because you don't have to do 1 by 2 by 1, you can just do 1 by 2, right? And not spend the money on that out of the money call. So, you could buy 700 call, sell 725, rate more 2, right? Or 3, right? And same thing. But I think it will gravitate on the positive news, it will get close to 700. On the negative news, it will get close to 550. And Netflix earnings are on a couple days from now, right? Where are the earnings? Netflix. And Netflix is 3 days. So it's in 3 days. 3 days. All right, 9 o'clock. Other questions? No fear trade for Silicon Valley. Thank you, Bob. Tesla big layoff. Yeah, Tesla, I think 10% layoff. Probably I heard Tesla's 10% layoff. All right. Okay, can remove Schwab. Well, Fargo is out, JP Morgan is out, so that's good. I can close Delta Airline. STZ, let's see. Notice how Fastenal is still at 70. CarMax, I think we're done with CarMax. Yep. Done with CarMax, Fastenal, Citigroup. So Qualcomm, we do have position in Qualcomm. Let's review the positions. I mean, it's recovering from the Friday's losses, right? So it's trying to close the gap. So Qualcomm continues to grind higher. NVIDIA is up 2.5% to almost 3%. Micron is up. Apple is down. Amazon is up. In Amazon, I did get filled in Amazon. $3.40. This is May 175, 180. 175, 180. Amazon, let's see. Material. So, okay, let's look at other positions. Okay, so we talk about play. I'm out of play now. This puts also. Qualcomm. I mean, I think QQQ, for now, we're still kind of in downtrend, right? So we're just basically at the Friday's session high, right? So we're at Friday's session high. Still bearish spread. You know, a lot of it just depends on your view on geopolitical risk. A lot of it has to do on inflation, right? Hotter than expected retail numbers, assuming that, right, TLT is down, right? TLT is breaking down too, right? It means higher yield, higher for longer, you know, last September, October caused 10% sell-off. I'm not saying we're going to have 10% sell-off. I think the market is being supported by earnings season, start of the earnings season, and seasonality. But, you know, it could be more than 1 or 2% pullback like we're having right now. So when you can see TLT continues to deteriorate, that means, you know, yield continues to run higher, which at some point going to cause concern. Needs to pull back. SH. So I still have SH hedge. I do have silver 2830 call. So maybe instead of, I mean, I closed the long side with the assumption that the short one is going to, you know, lose the, because of the such a big pullback, the premium is going to be gone. But I can substitute this with a stock, because stock, I don't, you know, there's no deterioration. So maybe we'll see how it shakes out. I still have gold positions, so I do have GLD, which is fine. And we just need to decide on kind of give it a couple of days and see what happens with earnings season, what happens with geopolitical risks, right? Bitcoin is kind of also doesn't look like risk. It's still not a risk on trade. It's still not a risk on trade. Yeah, actually, it looks like Bitcoin is deteriorating as well, right? So for now, oh wait, sorry, it's 5 minutes chart. Wrong chart, wrong time. Let's look at 1 hour. No, so Bitcoin has recovered since Saturday morning or afternoon, but it's still not at Friday's high. Okay. So that's silver, and then what else do they have? Wells Fargo. Oh yeah, what's going on with Wells Fargo? We have a rally on our hand. Okay, so that's, why does it show position 8.11? This is not right. Wells Fargo is gone. I assume it's a stale data. Yeah, okay, sorry. A little stale data. So we talked about Amazon. So I'm long Amazon. I'm long gold. Still have gold position, long Amazon. I do have NVO, right? I was buy and pullback. NVO looks like last time I checked is rebounding from Friday's sell-off, up 1%. So NVO is up. Have position in Qualcomm. So I'm going to keep 450, 440 until we see the change in trend. For now, I think trend is, it's down. Right? If you look at the spiders, if you look at the QQQ, short-term trend is down. Long-term, it's up. Short-term, Q is actually turning neutral. And then finally, still have silver, the second half of the butterfly, the credit call spread, with the assumption that volatility in silver is going to collapse, right? And I can take advantage of that. I do have 470 put, that I bought this out of the money put with the assumption that there will be escalation in geopolitical. There has been escalation, but it's obviously did not. So it's maybe if it loses half of its value, then just get out of the trade. Because the longer you wait and the longer nothing happens, the more value the spider put is going to lose. Still long XLE and long XLF. So long XLE, long XLF. Let's see, has energy recovered? Because energy also pulled back on Friday. For now, it's still a weak rebound, right? We went from a 99 to 96. So it dropped, XLE dropped by 3% on above average volume. So far, pretty mute response. It looks like everything, yeah. So small caps turn in negative, energy, XLP turn in negative. Banks, looks like they're holding on to its gains. So banks are still holding on to its gains, and spiders are looks like first reactionary low, right? The open price on Friday. So it's fighting for the open price around 513. VIX slipping back. Let's see, where's VIX? Yeah, VIX. But I mean, it's 16, right? I mean, it's obviously not at 19 on Friday session high. It did pull back, but it's still elevated, right? So there's still risk, right? People are still concerned. If it drops to 14, 13, then I would say yes. But for now, yes, VIX is slipping. It's reflected by positive. It looks like a mixed picture, right? Home builders are down. Yeah, the problem is 10-year yield, right? The problem is, I mean, as long as the yield continues to grind higher, market is not going to rally, right? It's going to have a hard time. At some point, something has to give. Either the QQQ is going to continue its pullback along with spiders, or the yield is going to drop. But as long as we have hot retail numbers, hot CPI data, strong employment data, that means that we're going from 5 rate cuts to 3 rate cuts to 2 rate cuts, 1, 0, and who knows, maybe a rate, increase instead of instead of cutting rates, maybe rate hikes. Sorry, not I misspoke. Instead of 5 rate cuts, 3 rate cuts, 2 rate cuts. As data arrives, you could get the opposite rate hike. That's not a core scenario. That's kind of, but the data, as data changes very quickly, people's perception changes very quickly too. And actually, 2-year yield is now at 2023 high, October high, right? So it looks like people now think that there'll be no rate cuts, right? Same, whatever they thought in May of 23 or they thought in August of 23, this is exactly what they're thinking right now. So 2-year yield is already kind of at these elevated levels. You know, and 10-year yield is not that far behind, right? It's 470. I think 5 was the highest, right? We're at 5. There's really no barrier, right? So I would keep an eye on yield. High yield is negative for the market, and strong dollar is negative for the market. And you can see QQQ actually turn in, you know, give up all of its gains. It was up 1%, and now it's down. It's not down, but flat. Spiders is at low. Yeah, so it looks like all of the indexes are a low of the day. I mean, there are risks, right? It's not like magic number, green light, and everybody, you know, let's go long. The risk is still out there. Plus earnings. So far, earnings reaction, I haven't seen any 2 standard deviation move to the upside. I've seen 2 standard deviation move to the downside, but not to the upside. So that also could be an issue. Well, except maybe Goldman Sachs. Goldman Sachs is kind of close. $9.13. Let me know if you guys have any questions. Spiders low of the day, 9.14. All right. If there are no other questions, then that's all I have for today. I will see you guys at the closing bell. We do have a closing bell or tomorrow morning. Thank you very much. Mark, hydrated muffin. Rosser, thank you. I'll see you guys tomorrow morning. Ernest, thank you. Thanks, everybody.